Welcome to the podcast series Talking Success, connecting the global FinTech community. I'm Stacey Jafta, and today I'll be chatting with Jeff Keltner, Senior Vice President of Business Development at Upstart. Upstart is a leading AI lending marketplace, partnering with banks and credit unions to expand access to affordable credit. Hello, Jeff. Good morning. How are you?
I'm great. How are you doing? Good morning. Thanks for having me.
Of course, it's great to have you. You're also a podcaster.
I am. We started a podcast called Leaders in Lending here at Upstart, and I was somehow nominated to be the host. So I've been podcasting for probably about a year. So I've really enjoyed the experience, actually.
Nice. How many podcasts have you been on the other end?
Somewhere around 20, I think, at this point. So.
Okay. And what do you prefer, being the interviewer or the interviewee?
I actually like a mix of both. I enjoy being the interviewer. I learn a lot of great stuff, but sometimes answering hard questions is the most fun. I like interview questions where I have to think and I don't have to, and not just read the talking points. That's a little dull, but
nice. Well, cool. Well, before we go any further, it'd be just great for you to give some background on yourself and then essentially what led you to become the Senior VP of BD at Upstart.
Sure. So I my education is in computer engineering. So I guess I've been on the technology side of things my whole career, but I came out of school and immediately started taking jobs on the sales and marketing side of technology. So I was at IBM selling what you could call mainframe computers, AS400s back when I was selling them, which was an interesting experience to go from, computer science at Stanford in the early 2000s to mainframes. And then I took kind of a wild leap to Google, which doesn't sound that wild, but to launch what has become Google Cloud as kind of the first business development person on Gmail for Businesses, et cetera, before it was a thing, and spent a number of years there kind of driving adoption of cloud computing and eventually Chromebooks and enterprise and education. And then what led me to Upstart was really, the individual who'd been running Google Enterprise, what's now Google Cloud at the time, Dave Gerard, left to start a company, and I was kind of ready to try the startup thing, and figured, a guy I knew and a market I was interested in was a good time to do it. So I made the leap and have been here since we were 4 people. So it's been a pretty wild ride, but that's been my journey.
Okay, coming from Google, was that a culture shock?
Well, it's certainly, yes. I mean, when you go from tens of thousands of people to 4,
a little bit, you'd say.
It's a little different. I don't know if culture shock's the right word, because at 4, there is no culture. And, 3 of the 4 of us that were there were ex-Google and had known each other to some extent. So, we were kind of defining the culture in many ways, adopted things from Google and brought things over. But at the same time, it's both terrifying and liberating. All right. It's terrifying because you're used to there being people to make sure you don't screw up writing or marketing or like resources. And we had none. At the same time, I very vividly remember this moment when Dave and I were like, we really need to talk to our customers more. Maybe we should have real-time chat. And, at Google, that's going to be like a 9, 12 month, 15 review, multiple vendor bill. And we're like, that's a great idea. And 2 hours later, we were chatting with customers because we could just research an opportunity, find it, throw some JavaScript into the code base and do it. And that was like, wow, this is really cool to be able to go from idea to testing in the market so rapidly, which was such a change from anything you could do at a place like Google, it was very liberating in that way.
Talking about testing and speaking to your customers, you've worked on a ton of products from conception to building their entire strategy thereafter. I want to focus on customer feedback. How do you go about obtaining this feedback? You mentioned like in 2 hours you were chatting to your customers. Like, how did you obtain this feedback, analyze it, and then essentially use this data to make decisions?
Yeah, it's the 2 parts to that, right? How do you do it, and how do you actually take that information and do something useful with it? The first one changes a lot as you go through, right? When we were first starting and we didn't have a website, and we're like, hey, we had kind of funky product at the beginning. It was, what are people going to think of this? And so we literally took paper copies of the planned website and took it to the Starbucks on the corner and said, what do you guys think of this? And tell me about why or why not. And it would ask questions, right? So starting from we don't have any customers. We don't have a website. So just going out and talking to real people who might be your customers was super valuable. As you get bigger, things like real-time chat or customer feedback surveys are really important. One of the things as you have a product in market, I think is really useful, and this will get into your how do you use the data, is seeing what people do, not what they say. right? Because people will tell you they'll do one thing and then they will do another thing when they're on your product. And so we'll use things like the ability to watch how people actually interact with the website, right? And that's often as valuable as, what a user might say in a survey or a focus group, or if you called 30 customers and asked them a question, they might give you a different answer than what happens if you actually see it. And so we try to both talk to our customers and get their feedback, what they say, what they think, but also observe how they actually behave, because those two things can tell you quite different stories. And the truth is usually some intelligent melding of the two. So I think you've got to be smart about how much you ask and how much you observe.
Of course. You mentioned it's tough when somebody isn't a paying customer to understand how they would use the product or respond to the product. I'm not sure if I've told you the story or told the story on the podcast, but I was chatting to somebody who was heavily involved in Tesla and finding out the reasons why people would be interested in self-driving cars. And people were saying, because people would want to do their makeup while going to work, or have some more time reading. And when people actually started driving the car, they realized, wait, people get car sick. This isn't actually why people want self-driving cars. And I think there is a huge difference in the messaging you'll get from somebody who is reading about your product to somebody who's using it. When it comes to just seeing how someone uses your website, some really great advice I had was somebody said, have somebody who has no idea what you do. Let them explain to you what they understand that you do and how they would use your website. And I've never, ever thought of that, but it was a brilliant idea.
Yeah, no, it's totally true that, people's behavior is just not what you expect. And watching the delta between those two, what they think they would do, how they think they'd react, and how they really do is really important. And the other thing, I think, whenever you're taking feedback, there's this famous saying in Silicon Valley. It's a Henry Ford quote that said, if I'd asked my customers what they wanted, they would have asked for a faster horse.
Exactly.
And it's a little cliche, but I do think the truth is, it's not your customer's job to define your product, right? That's just, they're not your product manager, right? They're your customer. It's really their job to help you understand the problem and the thing they need done and what they value. And it's your job to figure out how to do that, right? How to build a product that meets those needs. So there's also an old saying in sales that says, nobody buys a 1/4-inch drill, they buy a 1/4-inch hole, right? So customer's job is to tell you they need the hole. It's your job to figure out how to build a drill that's going to achieve that, right? And I think that's where, you can go astray just talking to customers sometimes, because they're going to describe for you in the context of what they understand to be possible, or products that they know what they want. But what you really want to understand is, like, what are you trying to do? Yeah. Why is that important to you? How do you think about succeeding or the value of this? And then it's your job as a product manager, as an entrepreneur, as an executive, to figure out how do I actually build something that solves those needs and those pains, which may be what the customer wants, right? But it may not be. And you may be able to do something far better than they're imagining, kind of like the faster horse in the car, right? The car is people wanted to get from point A to point B, and it was your job to make that easier, not just to build a faster horse. So it is cliche, but I think there's a lot of truth when you think about how to use feedback from users intelligently in those comments.
Definitely. Something I found interesting that you mentioned when we first met was you realized that the job you were brought on to do wasn't a good idea. And I want to know, how did you come to this realization, and what happened in that moment? You're like, okay, yeah, this is not going to work. What did that moment look like for you?
Scott, could you design a video game?
I could make you a hypothetical one. If I took some random genres, mechanics, maybe blended them together, and created a new hypothetical game.
Now that would make a great podcast.
Undoubtedly.
So what would you make? Something original and exciting? A Dark Souls city builder? A co-op roguelike?
Everything. All of that. We could use the Nemesis system and put it in a first-person shooter. And we could have a loot system with survival mechanics and motion controls. And maybe you could... save a kingdom from some out-of-control toasters. What about party?
Catch the Gaming Blender on all your favourite podcast platforms.
Yeah, it was, a little scary, right? Because I was hired by Dave to work with universities, which I had a lot of history with, as a distribution strategy for the product Upstart had that preceded our loans, which was called an income share agreement. And we really thought they'd be useful for students coming out of school, and that if we could work with the universities, we could, if career centers or somewhere, we'd be able to, be a distribution strategy, get this offering in front of the customers. And I went and worked with a lot of universities and realized none of the students that we wanted to reach were coming to the university with this question. So the university would be super excited, and then we wouldn't get any actual users or customers out of that. Probably, we had a nice partnership, but it wasn't producing anything. And I had to go to our CEO, Dave, and say, Dave, this thing you hired me to do, like, it's not the way to get distribution. We're going to have to do direct consumer marketing. And I had no experience in direct to consumer marketing. So, well, you go figure out how to do that. I said, oh, okay. And so, I think in the early days of a startup, you have to figure out when it's not working and when to pivot. We did that both in that instance on distribution strategy and ultimately pivoting away from that product. But it was terrifying, right? Because you kind of go, did I just like quit my good job to start a company and then I fired myself 3 months in?
I'm sure Google will take me back.
Yeah, you hope, right? Back then, maybe not now, given the way the world is. But so it's a kind of scary moment. But I think if you're going to be successful, particularly as an entrepreneur, you have to be willing to face up to those hard moments and be honest with yourself. And, I could have kept beating my head against that wall, but it was clear that wasn't going to achieve success. And your whole goal has to be, how quickly can we learn and iterate on our learnings to put something new into market, put a new strategy, and move to the next thing that we have to figure out and solve. And so that was, to me, much more important than anything. But it was definitely like a moment where you're going, am I just telling my boss to fire me? Is that roughly that's my message? Not fire me, but like the thing you hired me to do should not be done.
Yeah.
I don't know what you do with me in that scenario, but that's the reality I see. And you kind of had to just accept it.
So it was clear to you, but I'm assuming not to the rest of the team, like before you brought it to their attention. What do you say to businesses that have that feeling like, if only we stick with this idea for another 3 months and get in that loop, get in that cycle? I've chatted to quite a few co-founders or people entering a business and feel like it's really hard to get people to look in the other direction.
Yeah, I mean, there's no easy way to do it. I mean, I often, there's all these like little sayings you have, right? And it's funny to me that some of them are contradictory. There's persistence is brilliance. And then doing the same thing over and over again and expecting a different result is the definition of insanity. You kind of go, well, those two things mean the opposite. And they're both right. It's just like, you've got to know when to apply each. There's a little bit of just, being truthful with yourself.
Yeah.
But I think part of that is setting up your expectations and seeing how well you meet up to them. And I remember very vividly, there was a board meeting we had where one of the early investors who was on the board, we had built this product, and he said, guys, you told me if we built this product, there would be hordes at the gate.
Yeah.
I don't feel like there are hordes at the gate. Are there hordes at the gate? And we're like, no, there's no hordes at the gate. It was like, why are there not hordes at the gate? And so, you got to spend a little bit of time going, have we got the wrong distribution strategy? Do we have the wrong marketing strategy? But at some point you can kind of tell that you're pushing a rock up a hill.
Yeah.
Right. And successful startups always find a point in which the rock is rolling down the hill, and that's the direction you want to go. And so, you've got to kind of be honest with yourself when you're experiencing, hey, this is tough, but we're going to get through it. And when you're just not seeing the kind of market traction and adoption that you need. And so, in this example, it wasn't like I signed up one university and it didn't work, right? We had 2 dozen universities that we had done partnerships with, and none of them were turning into consumers. And you go, well, why not? And you peel back in and you go, is the problem there solvable? And the fundamental problem we had there was like, the users were not leveraging the distribution strategy we had to find the kinds of product that we were distributing. Well, that's not good, right? I can't change the user's behavior. So then the question goes, how do I follow the user to where I can actually, drive that distribution? So yeah, I think you got to kind of start from those first principles, be honest with yourself, and peel back the onion a little bit on like, what's causing the slowdown? Is it a solvable problem on my side? Am I marketing bad? Am I in the wrong place? Do my customers want part of what I have, but not another part? How can I change it? But you kind of got to at some point face the music that like, it's that it's not working and you need to find a new path. But I'll be honest, it's not, there's no science to that. There's a lot of art, and there was a lot of heartaque on all of the shifts that we made like that, where you go, did we just screw everything up? And if we just stuck with it for 2 more months, maybe it would have been there. And it feels obvious in retrospect, right? Like we shifted from income share agreements to loans. And used a lot of the same intellectual property to underwrite loans that we had used to predict income for income shares. So we can talk in detail about what those are if you want, Stacey. But we did more loans in the first month than we had done income shares in the first year.
Wow.
And 6 months later, it was like so obvious, right? You sit there going, "Oh my God, this was like, why did it take you guys so long to realize this?" And the reality was, at the moment we decided to do it, I remember the moment, and we were not sure that we had not just killed the company.
Of course,
right? Like. We thought maybe this will be a wild success. We were pretty sure that the current path wasn't a path to success. But we're like, there's always this thing in the back of your mind. Maybe if we'd stuck it out in 3 months, it would have been the thing. And now maybe this is not the thing. It's a more crowded market. And we just like made a choice that will totally destroy the company. And you feel that. And every day when you're executing it, you feel it. But I think you got to make your best decision and then you got to commit to it, right? You can't double guess that all the time.
How easy was it to get the rest of the business on board though?
It wasn't easy. I mean, I think the core of it was those four of us and a few others got together and said, we're committed. We're 100% committed. And we're going to drive the company that way. And we were a larger company at that point in time. So it wasn't like it was just the four of us. I don't know how many we were. But I think we had to go make the case very clearly that the thing we're doing is not working, that there's value in what we've created, but it's not being expressed and realized well in our current product and strategy. And we need a new one. And I do think for a startup, the thing that keeps you honest is cash, right? The reality was here's the results we told investors we needed to produce. We're not producing them, and we got to go raise cash again in so many months, or we can't pay the bills. And so that really forces an honesty with yourself about where you stand, because you know what that conversation is going to look like. And we said, do we feel like there's a good chance we can have better results at doing the new thing? And we said, yeah. So we made that case to the team, and we all had to kind of have a moment where we said, we're committed to this, even if we're not 100% certain. Because if you wait till you're 100% certain to make a decision in a startup,
too late.
You're dead. You can't.
Yeah.
You're always going to be uncertain with incomplete information. But you also have to, I think there's a phrase in Amazon they call disagree and commit. And some people might have disagreed. Some people may not have been convinced, but we had to all agree, hey, there's no, if we're divided on this and we're splitting our effort and we're not committed to the path, we have no chance. And so we all had to get in the room and go, this is the best path forward as we see it today with the information we have, as imperfect as it is. And we're all committed to putting 100% into making it successful. And I think people get the reality of that. I mean, in the smaller companies, everybody can see the kind of, they might not see exactly the financial reality, but they understand the position you're in and the urgency of finding a better path forward. So
definitely. I want to talk about complementary products. There comes a time where you want to widen your offerings. How do you find what product makes the most sense for your business, and what are the next steps after that?
There's not again, these things are as much art as science. So finding the next product, I think many startups try down this path too early, right? You don't want to be a one-trick pony. You feel like your business is long-term value with lots of products, but you really, I feel like you want to expand from a position of strength, not from a position of weakness, right? Which is, if you're going, hey, our economics aren't working, we can't figure it out, we just need 5 more things to sell and maybe it'll look better. That's probably if you're not killing it in your first product, dividing your effort on 5 probably isn't the solution to fixing what's wrong with the business. And so, Upstart really waited a long time. We started off after pivoting from the income shares into the unsecured personal loan. And we spent years just perfecting that and really getting good at underwriting the credit risk, optimizing the onboarding experience to be as frictionless as possible to increase the conversion funnel, optimizing our marketing efforts to lower our CAC so we could be unit economic positive. And we really got to a place where we were unit economic positive, on a kind of contribution basis, where we were cash flow positive and profitable on the first product. And that was really important to us, that we had kind of honed in and refined that first product, that we understood it well enough to really have built a business around it. And then we felt like we were expanding into new products from a position of strength, where we were a leader in our market and our product. We knew what we were doing. We were confident in how the business worked. And that felt like a good place to go and say, how do we apply those learnings to new product areas, versus saying, hey, the economics aren't working great, we're losing money, sell another 2 products to the customers and maybe we can make it up, right? We wanted to come from a place where we felt very confident in the business we had built and expand from there. When you ask where to next, really the question to me became, what's the next thing that my customers need, right? Where is there an offering that has good overlap with my current customer base? So we're in the lending space, right? And we look at the customers that we served well, and they were typically people who had been left out of the traditional credit system, who maybe didn't have a great credit score, who were maybe earlier in their journey, or immigrants who didn't fit the traditional mold. And so if you went, hey, we're going to go make a qualifying mortgage product, I go, well, that's not really what my customers need. That's a whole new customer base. And that means learning both a new product and acquiring a new kind of customer, which is a lot of moving parts at once. But these customers do need a car loan, right? They are buying vehicles. They could refinance our car loan. Why don't we start with that? right? Because that's a tighter fit to, you're looking at, I think, a number of things. How applicable is your intellectual property to that, right? Like how much of what you've built can you relearn? How many of your learnings will apply to accelerating your success in a new product, right? How much does my customer base need the new product, right? And how well do I understand how to distribute that product? And so you kind of got this thing like, how easy is it for us to build? How much do my customers want it and need it? And how much value can I really add? If you look at mortgages, for example, in the United States, the majority of what are called qualifying mortgages end up being purchased by one of the two big GSEs, government-sponsored entities. And they really end up driving the underwriting and pricing criteria because what they'll buy kind of dictates the market. And so if you've always innovated based on understanding risk better, well, a world that won't let you price risk differently doesn't really value understanding of risk that much. And so hey, that's a space where maybe we could do something, but like, are the pieces of the market well aligned for me to be able to actually realize value in the market for that? So you're kind of triangulating all of those things, right? Where are the customers needed? Where is there a gap in the market that I can exploit? Where can I drive value? Where is my intellectual property going to be most valuable in accelerating my ability to learn and build in a new area? And so you really are kind of like looking at all those things in a bit of a hodgepodge and evaluating new product opportunities because you probably have 10, right? They say, oh, there's 10 things we could do. And my question would be, which one can we get into the quickest? Can we add the most value to? Can we apply our learnings to? And you'll kind of judge that. And of course, there's also this side bit of like, where's the biggest market opportunity that's also in that mix? Like if it's harder to do, but the really big opportunity, maybe I want to do that. If it's easier to do, but a smaller opportunity, I don't know. And that's where the art comes in, where you kind of have to lay out your different options, evaluate them along these axes, and then have a real debate about which of those do you value more in your business? Which of those do you feel, if you're highly profitable, maybe you can make a bigger bet, right? If you're not, maybe you want to take something that's closer to what you're doing today, that's easier to execute, but maybe isn't as big longer term as your next product, and then move over time. And so, that's to me, the kind of art of it is you're evaluating along these different axes, but then you've got to sit down and have a debate about what really matters to us and how are we going to think about combining these things and making the smart choice about where we go next.
Yeah. In our business at Talent in the Cloud, we focus on FinTech talent. And because of the conversations we're constantly having, we got asked quite a bit to do some HR consulting, and just happened over and over again. And it just felt natural to start offering that as a product. But it was kind of like a no-brainer for us to start doing that. Do you feel like it should feel that way? Like it's just almost naturally that you're heading that direction, or do you feel like it's not always the case?
I don't think it's always the case. I mean, I think there's a bit of that. Google had an old framework, not lots of like sayings and frameworks, but they had like the 70-20-10. I think they got that from Intel or other places, but where 70% of your resource were on the core business, 20% were on adjacencies, and 10% were on kind of far out ideas. And as you're small, you probably don't have the ability to have a 20 and a 10 or either, right? When you're small, 120% is going towards the core. But as you get bigger, you start to say, hey, we should be investing in adjacent things. These are kind of the similar businesses that aren't as hard to launch, that make sense. And then maybe you got 10% on stuff that's like less sure, but is a big win if you could get it. And you want to you're not betting the business on that, right? That's not 50% of your resource. But I do think some of the big wins come from when you start to think a little bit farther outside of what you're doing. So I think it's a both and over time.
Yeah.
The most natural fit is the one you go, hey, this is obvious. Like we should clearly be doing this. And we know the path. But then the stuff that can be really, step function change in your opportunity are often a little bit farther afield, and they require a little bit more thought, a little bit smaller investment to learn, right? That 10% is not a lot. And you got to figure out, what am I going to do with that 10% that's useful? But those can sometimes be the most exciting longer term opportunities, and they're going to be a little farther afield and feel a little riskier and feel a little less comfortable. But in the long run, if you want to build a really sustainable business, a large business, I think it's important that you ultimately pursue those.
Yeah. We were discussing how every CEO needs a Swiss Army knife, a person who can just parachute down at a moment's notice. Why is this valuable and useful for early stage companies, and how did you become that person?
So this comment came because my CEO came onto Twitter and described me as the company's Swiss Army knife, and said that every early CEO needs one. And I think I should reprint all my business cards and just put Swiss Army knife.
New job title.
I think So I kind of ended up with this probably because of this kind of interesting choice I made to switch from engineering into business, right? So I still write code. I've actually written machine learning models because we do machine learning at Upstart. And I said, I won't understand it unless I wrote one. Now, I don't think the machine learning team would find my models particularly impressive or useful, but it was important to me to do it. But I think particularly in FinTech, this is true. And the reason is it's such a complicated business. Like when Upstart looks at launching new businesses, right? You've got, what are the consumers going to do? How do we build the UX around it? How do we develop a risk model that makes sense? So we've got the kind of traditional product experience. What is the online experience? What are the steps? What's the conversion funnel? But then you've got the risk part. Like how do we actually understand the risk? How do we understand the regulatory compliance hurdles? How do we understand the capital markets, the people who might ultimately purchase loans and fund the lending activity? That's another element of this. And then the customer acquisition is another one. And so when you have that many pieces that move, it's unusual for someone to understand the totality of the business and to be able to weigh off risks among those different areas, or to understand the implications of, hey, if we change our underwriting model in this way, what's that going to do to the investors' appetite for risk or perspective of the risk, or the regulator's perspective of how we're doing things. And so balancing all those things is really hard, right? And there are lots of problems that kind of sit at the intersection of multiple areas, particularly I think in FinTech. Like a B2B SaaS is a little less complex in that way. A consumer social media company is something that is a little bit less complex. But ultimately, the CEO ends up having these problems that sit at the intersection of divisions, of units, of groups of people. And someone who understands across those units is really valuable in navigating that. And too often for a company, there can only be a handful of people. It might be the CEO or a co-founder who really see that broad perspective, but they can't get involved in everything. And so having people who kind of understand the broad perspective of the business, the different stakeholders that have to be brought along, internal and external, right, and can help people navigate those difficult things, those difficult trade-offs or balances, or how you want to think about, I'm getting into a new product. Should I go for this market segment or that market segment? Well, regulatory risk, investor risk, underwriting capability, right? That's a hard set of things to weigh off. And I think a lot of times it's useful to have someone with that broad perspective that can hop into a particular problem area or question or a new area of research and help kind of drive clarity and make decisions in that space.
I think a big part of that is also curiosity. For me, I was lucky enough to come really early into the business, and I was like, why do we do things like that? Do you mind if I sit in on that meeting and just properly understand why this is happening this way? And it was more just out of curiosity that I started learning all the different functions of the business, to the point where if somebody from a different department wasn't there, I'd be able to step in and help where needed. But I think that a lot of it came from curiosity, and it's something that it's hard to teach somebody to be that way, because you can't just become a Swiss Army knife. I think you really need to naturally want to be a part and feel, I don't know, just curious. I think that's the word that comes to mind.
Absolutely. And I think it's, if you think about what it means, I talk about understanding the business on a broad basis across different areas. That's not inherent, right? And many people in their careers think, oh, I'm in marketing, right? So I'm going to understand the marketing part of the business. But for us, do you understand the capital markets? Are you interested in learning the other areas? So we started doing something called securitizations. We would sponsor some of the investors who had purchased our loans. We'd buy them back and run an asset-backed securitization. And the only thing I knew about asset-backed securitizations at the time was that apparently ones with mortgages are the ones that almost blew up the world 15 years ago. And I went, I don't understand what this means. So I would just call our capital markets team and go, okay, we did it. We did an ABS deal. Like I hear there's things called credit enhancements. Like, what the heck are they? And they sent me like a 60-page pre-sales report on our deal. And I said, read this and then call me. I was like, okay, I'm going to go read it. And I read it all. And I said, okay, I don't know. I'd be emailing them. Okay, I don't understand this credit spread thing. Can you explain it to me? Or what is over-collateralization? Yeah. Why does it matter? And how do you weigh that off versus the other? And you just ask questions. And then eventually, people come to you and ask the questions. And, I've always been someone who wanted to understand all the parts of the business. And I think it's really important. I actually think it's really important that every employee in a company understands the fundamental business model, how the company makes money, how it differentiates. I think too often people don't really understand how that happens. And quite importantly, how what they do impacts how you make money. If you're in operations, it can seem a mile away from business, but like ultimately operations for us is one of our largest expenses. And so getting good at it, serving customers quickly, answering questions quickly, automating questions that we're spending time on the phone so we can do it through an FAQ or a chat at lower cost, like that drives the economics of the business because it lowers one of our largest costs on a unit basis for loans. That's a big deal. And I think it's really important that people understand that part. But if you really want to be a Swiss Army knife, you need to understand product and marketing and, for us, capital markets and how the fundamentals of the business work, a little bit of engineering, right? At least product design and architecture and, what's hard and what's not and business model and strategy. And so all those things kind of come together. And you're right that you kind of got to want to learn a lot of stuff and ask a lot of questions. And it's shocking how many people just go like, nobody asks me that. I go, well, I just don't understand it. And maybe it's just I hate not understanding things. So when I sit
Same.
I go, I don't understand what you just said. And one of the pieces of career advice I often give is like, don't be afraid to ask this stupid question. And I'm sitting in a room and I go, everybody else is nodding. So obviously they all know something, but I don't understand what was just said or why what was just said means what everybody seems to think it means. And I will often just raise my hand and go, can you explain to me why X means Y or why these, why this is having that influence over there? I don't get it. And what's stunning to me is the number of people that after that meeting, people who were shaking their head like they understood will go, thank you for asking that question because I had the same question. Go, why didn't you ask it? So, ask the stupid question because you will learn a lot. Surprisingly, a number of times people will also have the same question and not have asked it. But I like that's the way you build up that knowledge base. And importantly, I think is the knowledge, not just the specific knowledge, but how A impacts B, right? How a change in investor appetite impacts our consumer conversion funnel, right? Like that's a very real thing that's non-obvious. And, when somebody says, well, this is going to mean when we change this over here, it's going to mean this happens to our conversion funnel and our economics are going to have this. I go, okay, do I understand the connection? Because the hardest parts of a business are where the one area impacts the other. Those kind of seams between departments and divisions. That's where the hardest stuff happens. And when you really understand the links between them, that's when you start to get the big picture and be able to really have strategic conversations and play that Swiss Army knife role of being able to cop in and say, hey, I can help connect the dots between A and B and C to make a smart decision because often these things are very connected, but you really have to understand them to see it.
Jeff, thank you so much for being on the podcast.
My pleasure. Thanks for having me. This was a fun conversation.
Loved it. Where's the best place for listeners to reach you?
I'm easiest to find on LinkedIn. I don't know what's going to happen with Twitter. I'm sometimes on there, but I'm always on LinkedIn, just Jeff Keltner. You can find me and you can obviously find us on the podcast, but that's a little bit of a one-way medium. So the podcast, wherever you find your podcasts.
Thanks so much, Jeff.
All right. Thanks, Stacey.
Thank you for listening to this week's episode of Talking Success, Connecting the Global FinTech Community. Feel free to follow us on LinkedIn at Talent in the Cloud. And if you're interested in exec talent, expanding your team, or you yourself are looking for a new, exciting change in your career, check out our website, talentinthecloud.io.